everyone, John Henry here, slingshotfutures.com. Welcome to the daily futures market outlook for tomorrow's trading. Tomorrow being the 22nd of the month. It's going to be 2/22 of 18. Overall, pretty good day in terms of volatility. Good to start seeing things pick up a little bit, and well, fingers crossed we keep this up. I definitely like the extra volatility in the markets, but not maybe so much. Those 30-point days can be a little bit tough. Before we jump into the charts, as always, make sure to swing it over to slingshotfutures.com, scroll down and click on the Join the Daily Outlook newsletter. From here, you'll be able to register for our email newsletter list so you'll be notified every time one of these videos comes out. But along with that, in the email, we go over all kinds of different stuff, whether it's crypto, stocks, you name it. If it's moving, it'll show up in that list at some point. And there are a lot of things that we just don't have time to talk about in the video inside of that newsletter, so make sure to sign up for that so you don't miss any of those. Of course, along with that, if you haven't done so already, click on the Live Trade Room subscription and trial info, and that's where you can sign up for a free 3-day trial in the Live Trade Room and hang out with us for a couple days, kind of get your feet a little bit wet and see how we approach the markets. Really good way to kind of hang out with us for a couple days and, you know, ask questions and see how we trade. So make sure to sign up for that if you haven't done that either. So right off the bat, the euro is still chopping around that big level of support or resistance. 23,695 has been that's been a key level. We have resistance, double bottom support and resistance. A little bit of resistance for about 4 hours or so, and then big support and resistance, and now once again resistance. So this level just continues to keep slamming the market around, and now we're trying to drive through the bottom of the rising wedge. Now, the rising wedge itself isn't the overall beginning of the wedge. This is actually a little bit modified to give us a slightly tighter type of wedge. If we look at a wider point of view all the way down here, that gives us something that is a little bit further away, and that might end up being what we have to work with, just because, well, we've had to kind of tighten price up a little bit to give us something else. But if we do start seeing a breakdown, well, that might be the next stop. Now, a couple things that do obviously stand out. One of the big things we've been talking about for a while now, and we were actually talking about it back here, was looking for a trap down to this previous swing low. They haven't had it yet, and the reason I like that is mainly just due to the fact that we had a double top high. They broke out aggressively above it, and they pulled back, but not quite filling that open distance. That creates somewhat of a gap between those two swings. And this becomes a large area of support or resistance that buyers and sellers will likely begin participating in this case mostly buyers, on a dip lower. So I am looking for a relatively large pullback if we do start breaking down, and that's going to be from really, I mean, we could mark this up a lot of different ways, but I'll just mark it up the widest points. That gives us a zone of interest from 22,090 all the way down to around 21,400s, where buyers are likely to begin starting to jump in. Now, of course, the really good test would be the bottom of that area, because that gives us the largest pullback that we can get in terms of still maintaining market structure. And notably, if this continues, if this keeps going on for a little while and the breakout doesn't happen too quickly, we might be able to combine that rising wedge support and the bottom of that area in the same place, and that would create a very nice level of interest for the buyers to shove the market back up. Right now, we are getting obviously some news reaction off of the FOMC. We're getting some things just kind of moving around. Most of the markets have a pretty volatile last bar that we're looking at here, so it's not going to be a big surprise across the board. What I really want to see is, are they able to, the sellers that is, take this through the 200 period moving average? We're resting on top of the 200 period moving average again. And the last time we were here, we bounced off of it over the course of a day or two and then went flying higher. And the last time we were there before that really wasn't until, I mean, mid-December, and they kind of chopped through there for a little while before catching another big rally up. So that 200 period moving average does kind of claim a lot of price action movement. Now, not the best movement, albeit in the world. The last one around was pretty good, but the one before that was pretty choppy. And that just leads us to believe that now that we're here again, well, given what we've seen so far, we're probably just going to be a little bit choppy. We're going to go a little bit range bound sideways and chop around this area for a while, and that's going to be at around 23,085. That's where the 200 period is. Now, along with that, we do have that rising level of support, and that was holding for a little while, but with this big bear bar right here, anticipating that the market's just going to go a little bit sideways for the next day or so while we're waiting for the market to kind of figure out what it wants to do. Again, I would love to see a dip down into that larger buy zone. Over on gold, we are coming into that large area of interest, right? We are sitting in it right now. That's the earlier wedge channel top. That's the rising channel bottom. That's horizontal support and resistance. It's all coming in the exact same place. And I'm sure if you were to draw a fib from low to high, that'd be around about a 61.8, maybe down to a 786. in that area. Now, I don't have it drawn up, but again, we already know there's plenty of levels inside of there. And yeah, it's pretty much right on top of the 61.8. So lots of things stacking up in the exact same location where we are right now. And even though we are getting a lot of volatility due to FOMC, this is an area that is anticipated to find some bouncing. Now, to be fair, we have already bounced for 4, 8, 16 hours. Arguably, given this wick on the top, you can add another 8 hours to that if you wanted to. I mean, it has already procured a really nice bounce off of that zone, but we're still kind of stuck inside of it in this back and forth chop and slop with the FOMC bar inside there, and we're not really breaking down below that support. There are definitely some reasons to believe that we might find a little, a few more candles of bouncing inside of this, depending on how this big bear bar closes. So overall, we're in the area of interest right now. This is the do or die for the buyers. If they're going to hold this, they're going to want to do it sooner than later, especially with the defense having to come in of this big bar. If they fail that defense, we could be destined to go a little bit further down to that rising wedge bottom, and that would put us at around 1310s or so, depending on how fast they drop from there. Over on crude oil, we are continuing to see bearish momentum coming off of the highs of 50%. We were able to trap above those tops, use it as support, then use it as resistance. They didn't quite make it back as resistance again. It's really what I wanted to see, is the market coming back and tapping that level again and driving off. But this is another one of those situations where we have to say, is this just good enough? That's pretty far away for me to want to say that's good enough. I don't think we've had the physical test yet. Now, one caveat to this, of course, is that going into tomorrow's trading, we do have crude oil inventories tomorrow. Remember, Monday was a holiday, so the inventories got pushed off a day, and we're dealing with inventories, and we also have the API candle coming out here in about 15 minutes. So there's a lot of things that can change from what we're looking at right now to even a half hour from now. It can be a completely different story. I would still love to see a push back up to retest that 62.11 area to cycle back down. We just might not get it given the fundamentals that we're expecting over the next couple days. Inventories, we have the API coming out a little bit later. There's a lot of stuff going on today with FOMC. There's a lot of things that might be a little bit of a spanner in the works, but I would love to see that 62.09 to 62.11 area to sell back down once again. Overall, going into the overnight session, we do have the ascending wedge. The ascending wedge has already broken down. We haven't seen that bull lift quite yet. Again, just kind of anticipating that we go a little bit sideways, maybe a little bit more down. And the reason I say a little bit more down is because if we look at this previous last swing here, a lot of times the market likes going sideways after it's trapped a swing. We haven't had that yet, right? That swing has come close, but we haven't trapped it yet. They missed it by just a little bit. So what I would really like to see is a dip down to trap that, and if we fail closes below that area, then we could just go sideways and begin creating a range inside of here for the next day or so. And I keep in mind, again, we have inventories tomorrow, so that can change very quickly. But that's kind of what we're looking for. So going into the overnight session, I would love to see a snap higher up to 62.09 for some selling volume to drive the market back down again for inventories going into tomorrow, where then we can wait and see what we're kind of expecting. Now, keep in mind as well, as a side note, crude oil inventories are coming out tomorrow at 11 o'clock, not 10:30. And the forecast for the inventories tomorrow is 1.795 million. Now, we haven't seen the API yet today, so that might give a little bit of more information. But for right now, we're looking at a bearish number forecasted for tomorrow. We'll have to wait and see what the API tells us to do. And then over on the S&P, we are seeing a big dive off of the highs. The S&P retested the 61.8 for a third time. Well, I guess you could say 1, 2, 3, 4. This would be the fifth time, but this to me is 1, 2. We've got a really obvious test of the 61.8 and a complete failure. It gave up. We're seeing a lot of selling volume coming back down in a very similar situation to what we were looking at before. We have a level of support and resistance, support and resistance, all coming into play. And now with such a huge bear bar down, I have to assume that we're probably one of two scenarios. Either we close a really strong bear bar, we still have an hour and a half until that closes, and if we close a really strong bear bar, one of two situations generally comes up from a strong bar, right? We have a strong bear bar down. The next scenario is this. Either we continue and keep slamming lower, that's situation A, or situation B is that we just don't go anywhere. We go a little bit doji, we maybe pull back on itself a little bit, go into it maybe 25, 30% of the candle from before, and then look for a resumption of the trend. Now, the only reason I'm not saying a reversal off of that is primarily because we're coming off of a lot of levels of resistance. We have the wedge top coming into play, horizontal resistance. We have the 61.8 coming in. We have a failure on the highs. There's a lot of stuff that makes sense for the market to push down, not to mention the daily chart that we've been talking about for the past, since this initial drive lower happened in earlier February. We're anticipating a bigger second leg down, and this is fundamentally and technically looking pretty good to kick that off. Now, the overall downside move, again, is this one candle going to spark it? It could. It definitely could. But generally speaking, when you're looking at a big dive lower, it doesn't just go slamming farther down. It kind of ramps into it. You can see here it kind of picked up speed, paused for a little while, and then went down. So again, I would anticipate this probably slams down and then picks up speed and then dives lower if it is going to take out those lows. If it's going to take out the lows, it's going to be either tomorrow or the day after. Otherwise, we go a little bit sideways and range bound, and we could just grind our way down there too, I suppose, and kind of do it by the end of the month. But chances are things fall a little bit faster than they tend to rise. So if we get some fear in these markets, we might see this thing come tumbling back down to the lows going into tomorrow. Of course, the major objective is going to be 25.58 and a quarter. Those are the low closes, and they've held very well so far. But if we can break down to a new low below 29.5, be a pretty nice area of some targets on the sell side. So that's going to do it for the outlook. Again, tomorrow, in terms of news, we do have a couple things going on. Most of the news is outside of the U.S. So at 4 o'clock out of Germany, we have the IFO Business Climate Index. At 4:30 out of the UK, we have the GDP quarter-over-quarter and year-over-year for quarter 4. At 7:30 out of the Eurozone, we have the ECB publishing the accounts of monetary policy meeting. It's kind of an interesting one. At 8:30, Canadian dollar side of things, we have the core retail sales month-over-month. And then the only U.S. session news announcement that we have to worry about tomorrow is crude oil inventories, and that doesn't happen until 11. So a little bit of a toss-up in terms of what to expect tomorrow. We don't have any big U.S. news. We've got a lot of stuff going on in the markets, obviously. Is that enough to kick things off, or do we need a catalyst like news to kind of fire that move to the downside? We'll have to wait and see. But for right now, looking for this bearishness to continue on the index markets in the overnight session. Maybe pause for a little while, but looking for it to ramp up and start grinding its way down. So that's going to do it for the outlook for tomorrow. As always, like we always say, it doesn't matter what market you're approaching, what the news is or what the news isn't in some cases. Always make a plan, trade the plan, follow those rules, and you'll be A-okay. Until next time, we will see you all then.